you next week. Dinshaw Irani is joining us now. He's Chief Investment Officer at Helios India. Dinshaw, a pleasure. Thanks very much for your time. One stock which has been, I don't want to say ailing the market or the banks index specifically, has been HDFC Bank. That's the one name that, you guys have owned, I think, since the time that you started the fund. And you've been bullish, you've held on. What's the likely trajectory from here? They had an analyst day also recently, and they basically highlighted that size is not a constraint to growth, the prior year growth rates, which has come off. But even if they're able to do, 20, just under 20%, that'll be fantastic at their size and scale. What are your expectations from HDFC Bank from here out?
Hey, Prashant, thank you for having me on your show, and a very good afternoon to you and your team and the viewers. So, Prashant, the fact is that when you're looking at the economy of the size of India moving, you can't ignore the banking sector, right? The second part is that a bank like HDFC Bank should always be a core part of the portfolio. Okay? There was an overhang because of the merger. I think once the merger is through, that overhang will be over. And frankly, I mean, whenever you develop a portfolio for yourself, you look at that portfolio you're hoping is going to run a marathon, but in a relay fashion. Right? So there'll be a set of leaders in that portfolio who will be running faster than the whole group. And once they tire out, there should be a set of leaders who are ready to take over the baton and run in the future. Right? So this is what we're trying to do with the like of HDFC Bank is what we are doing with. So it's been probably a laggard in the portfolio, but it's been running along. Right? It's not been too much far behind. And our feel is that once this merger is through and all these questions are answered, in fact, the analyst meet was a fairly good one. In fact, most of the analysts came out quite positive, and they were quite happy with the confidence that the management has shown in terms of keeping up with the growth overall. I mean, the deposits keeping up pace with the growth that the whole bank is expected to do. In fact, the top line growth is not an issue at all, according to the management. It's more of the deposits keeping pace with that to fuel that growth. So I think if that comes in and kicks in well, even a 20% growth at that base is a huge achievement as such. And if that consistency comes in, I don't see the valuations having a problem here. And probably this is what's going to pull the whole bank nifty going forward. So that's our call, and that's why we remain comfortable in that bank.
Dinshaw, by any chance, you look at a company called MedPlus. The stock is locked in an upper circuit. It's India's second largest e-pharmacy chain. They've been adding stores very aggressively. More than 1,000 stores have been added in FY23. And the stock listed in, I think, December of 2021. So it's been a while, 1.5 years. The issue price was 796. But the stock didn't do too much. In fact, after initially rising to levels of 1,200, it fell to levels of 600 as the street was concerned about rising competition from competitors like Tata 1mg, the fear of more discounting in e-pharmacy. But the stock has made a comeback, and today it's locked in an upper circuit of 20%. Do you look at the e-pharmacy chain in India, which is Apollo, MedPlus, and any thoughts on this space?
So, Reema, we did see it at the time of the IPO. After that, we lost track. And frankly, I mean, we didn't participate in the IPO because our feel was that Apollo was a better option. The largest chain of pharmacies was within Apollo as such. So we decided to stick with that. And frankly, I mean, at that point in time, Apollo was, even now, in fact, is far better placed than probably the MedPlus or any other pharma chain that you're talking about to capture the e-pharmacy space, given that they're probably covering 46 or I think 60% of the population. I mean, that's how far they're away. I believe that they're like 40 minutes away from 60% of the population. That's what they keep claiming, if I remember my figures right. But anyway, so that's what we did. And frankly, I mean, we haven't seen MedPlus quite closely, and I don't know why it is up today at limit. Probably, I don't think I saw the results, but maybe there's something going on here. But frankly, are we not too comfortable getting into these kind of names as such?
All right. Hi, Dinshaw. You haven't liked IT as well. And I think you briefly mentioned last time around that you're on the short side on select paint as well as steel companies. Holding on to that view?
Nigel, totally holding on to that view. IT again, our feel is that again there's a second leg which is starting off after the first leg fizzled out in a very big manner of rally that fizzled out in a very big manner. I think this again there's some kind of uptick happening here. But frankly, I mean, if you try to see what's happening on the Nasdaq, it's not the service providers who are really running there. It's more of platform companies or product companies which are really doing well, rather than the service providers who are, in fact, laying off people out there, right? I mean, so if you listen to the calls that they're getting into, they're not too gung-ho on the service part of the business as such. So that's one portion. In what you mentioned about paints and again the metal company, steel rather, the fact is that with China going off in steel in particular, the expected comeback of China wasn't to that extent. So obviously the metal prices are again weakening up. And in the case of paints, it's more of a valuation call than anything else. And our feel is that the valuation that they are today may not be supported by the growth which is expected in the future for these companies. So we remain negative.
Okay, got that. By the way, just take a look at the market. We have 18,500 on the board. It seems to be sticking for now, holding for now. And that's a 182-point rally on the Nifty. It's been up, and away. By the way, Sun Pharma, we had the additional numbers come out, and that's a really nice-looking number. The street seems to like that on the U.S. business. About 244 million, if I remember the flash correctly, which is pretty much ballpark in line with estimates. 245 to 250 million was the expectation. And the stock is putting on some more weight, serious weight, after what's been a solid show for Sun Pharma in the US markets and even in their other geographies, really. Let's get to pharma then, Dinshaw. Hi, Surabhi here. If there's one sector which has been really consistent in beating estimates in this season, it's really pharma. Whether it's, Divi's earlier this week, look at what Sun Pharma is doing right now. Even the smaller players like Biocon, Piramal, that was struggling all throughout, suddenly came and, surprised the street. Do you like the space, first of all? And if yes, then what would you buy? Because you can look at US generics, you can get, specific India-focused pharma companies. So what would you pick?
So, Surabhi, frankly, I mean, the US business, I think, is going to go through a big change, in fact, a reset, if we may use that word, because nowadays, even if, like, my analyst was telling me that there's an $8 billion molecule which is going off patent, and there are 27 filers on that particular molecule as such. So that game of 8 or 9 guys trying to corner a big market, I think that's over and done and dusted. So we have to be very careful on the US. All the companies that are facing US, probably this quarter was an aberration because most of these guys did fairly well. But in the future, you still have that pricing pressure in the US going ahead. So our feel is that concentrate more on the domestic guys. In fact, we're looking at a few names here. I think the kicker in India is not only is that per capita are going to move up, obviously the health spends are going to move up. So that's why we are more clear that it's better to look at domestic focused companies in pharma also, which should do well with this kind of a uptick in per capita income. So we stay there.
Does that, so you're looking at India-focused pharma, does that include the new listing? Any other name? Or I think you're referring to the new listing, are you?
No. I'm not referring to any new listing or any other name. I'm not going to say anything else. So.
Okay, fair enough. But we've got some sense of how you're sort of dividing up the sector. Always a pleasure talking to you, Dinshaw. Thank you very much for joining and have a great weekend. Yeah, we hope to talk to you again soon. Well, we